well, welcome everyone to the first ever Raise Green Investor Day. We're delighted that you're here to join us. I am Franz Hochstrasser, CEO and co-founder of Raise Green, the marketplace for local impact investing. And today's session is being recorded, so we'll be sharing the recording afterwards. Yesterday, the EPA released its first climate indicators report in 4 years. The new data shows yet again that the temperatures are rising and it's increasing at a rapid rate. And since 1901, surface temperatures across the lower 48 states have increased by an average of about 0.16 degrees Fahrenheit each decade. And since the late 1970s, that rate has jumped to as much as half a degree per decade. This is just another sobering reminder of what we already know. The climate crisis is impacting every sector of the economy and every region of the world, and we're all implicated. And this peril comes in the form of floods that are at least 5 times more common than they were in the 1950s, drinking water supply threatened by droughts, and wildfires being bigger and burning more land and for longer seasons every successive year. These and other climate impacts drive direct and indirect public health implications, serving as a threat multiplier. And those adversities hit everyone, but they disproportionately hurt underserved and historically disadvantaged communities that can least afford to bear the extra costs and burdens of adapting to these changes. And that's just not right, and it's not fair, and we all can do something about it. So the other side of the coin is that as we begin to reemerge from this pandemic-induced shutdown of society, we each have a choice to make about an opportunity for this defining decade on climate change, and that is what's next. There's great promise of a new inclusive economy and that works for everybody. And the Yale program on climate communications is finding that more and more people are alarmed. The amount of people who are alarmed about climate change has increased from 11% to 26% between 2015 and 2020. And the dismissive segment of those who say climate change is not an issue has decreased by nearly half, from 12% to 7% during that time frame. So we're all more motivated as a society, and we need solutions that scale faster than the pace of the problems. Those solutions are actually within our grasp as well. So up until 2016, only the top 10% of Americans were allowed to invest in most private companies. And that technically changed with the finalization of the crowdfunding rules here in the US, making it possible for anyone to invest in small businesses and startups. But until March of this year, crowd investing platforms like Raise Green were hindered from rules that prevented rapid growth. And crowd investing, or regulation crowdfunding, which we operate under, represents an opportunity for the 90% of Americans who aren't rich or are considered non-accredited investors or retail investors to have more of the same types of investment opportunities as the wealthy. These retail investors account for upwards of about $17 trillion in wealth, which is 24% of US wealth. And it also gives clean energy and clean tech entrepreneurs a way to raise money that never existed before. And that's why we're here. More than ever, an organized group of dedicated project originators and impact investors can not only stop the game, they can actually change the world. So in March 2021, the SEC passed new regulations that expand the size and scope of Raise Green's capabilities in 4 main ways that we want to share with you today. First is that there are increased maximum raise limits for offerings. So previously, the most that could be raised per year was $1 million, 1.07 million to be exact. And now crowdfunding offerings can raise up to $5 million per year. So the projects are limited to 5 million, like solar on local school, or energy efficiency upgrades for low to moderate income housing, or electric vehicle charging infrastructure. And whereas before, $1 million could get a neighborhood leader to raise enough to crowdfund a few buildings, like a town hall, now a neighborhood leader can raise enough to power an entire community. And second change is that limits have changed for investors. So when signing up for a Raise Green account, non-accredited investors are asked to enter their net worth and their means of determining the maximum amount that they're allowed to invest based off of their income and net worth. The new regulation makes it weighs that net worth against their annual income and uses the greater amount to determine maximums. While still maintaining investor protections, they can now invest even more. The changes also actually remove the limit for accredited investors and institutional investors. They were previously only allowed to put in $100,000 per offering. Now they can put in as much per offering or throughout the year as they want. So that is a huge opportunity for larger investors to come in and demonstrate the power of blended capital in the form of a regulation crowdfunding offering. The third change is that issuers are now actually allowed to test the waters or do indications of interest. So up until now, there were very strict rules against advertising a regulation crowdfunding offering before it went live. But now issuers are actually able to go out with a test offering beforehand. And as long as they're not already doing a Reg CF raise, they can put out promotional materials, put out pricing, and start to solicit indications of interest from potential future investors. So companies like climate entrepreneurs can measure the amount of interest that's out there before they go through the process of doing a formal filing. The fourth area is that crowdfunding vehicles are now allowed. And what that means is that now companies that can raise that $5 million per year through a special purpose vehicle whose sole purpose is directly acquiring, holding, and disposing of those securities in one or more offerings. So it can be a much smaller piece of a much bigger capital stack. For example, you can think a 100 megawatt wind farm could sell $5 million to the crowd and then use that money as part of a much bigger project. So these are some of the reasons why we're particularly excited about this year and about sharing those opportunities with you as investors, as well as potential issuers of securities going forward. And these new favorable regulations went into effect in March, 5 years after the inception of regulation crowdfunding in the US. And it's easier now to raise capital and invest directly in impactful community scale projects than ever before. And that is where you come in. We have in the US now also a bold new climate target, 50 to 52% below 2005 levels by 2030. And countries of the world are expected to accelerate their decarbonization and deploy more capital and the run up to COP26 in Glasgow, which is the global climate conference, and try to help address this $4.6 trillion global infrastructure gap by 2040. These are really big targets, and sometimes they can make us feel small, but at Raise Green, we know that we can do this. We just need everyone involved if we're going to get there. The real action happens one project at a time, one investment at a time, block by block, and we're committed to achieving these targets together. This is honestly, we believe, the largest economic and social opportunity ever facing the world, and everyone should benefit from this transition if we do it right. So cutting US emissions in half over the next decade is going to be difficult, but there are multiple viable pathways to get there. And America's community leaders and entrepreneurs are already putting their money where their mouths are. And you're going to hear from 3 of those leaders today. So with that, we at Raise Green try to make it easy for everyone to take action and contribute to this whole of society mobilization to create, fund, build, and run the economy of tomorrow. And we're excited to partner with these 3 amazing companies pushing the vanguard of climate tech and clean energy deployment. We hope you'll join us and become a Raise Green investor or a project originator. So now I'll turn it over to my co-founder, Matt Moroney. He's our president and chief operating officer here, and he's going to be our master of ceremonies to run us through the day. Over to you, Matt.
Thank you for that welcome, Franz, and the context, and welcome again, everyone. Let's get going. Today, each issuer will share details about their investment opportunity. It's your chance to hear directly from them and to ask them questions. So please do ask questions. We're really excited to hear from you. First off, some logistics, and a bit of background about what to expect today. This is being recorded, so keep that in mind. Raise Green is a US-based funding portal with offices at Greentown Labs in Boston, Massachusetts. We are licensed by the Securities and Exchange Commission and FINRA to sell private exempt securities. We are the leading US platform focused on impact investing and ESG in the inclusive financing, cloud, and crowd investing industry. And we've built software with IBM for rapid project creation. So think GitHub for companies or franchising an urban farm like McDonald's does for fast food. We've been in business for 3 years, and we financed $1.5 million in transactions through 6 different securities offerings since launching in July 2020. We bring investors and companies together on our marketplace. And as the funding portal, we do due diligence on each offering. We don't provide tax, accounting, legal, or financial advice, and we encourage you to review all the materials, do your own research, seek your own counsel, and ask them questions on the forum before making an investment. But today isn't about us. It's about you and the companies raising money on the marketplace. Each company will speak for roughly 7 minutes, and then we will ask questions from the audience for another 5 to 7 minutes. If you'd like to ask a question and didn't get a chance to send it ahead, please post it in the chat or the Q&A module. If you can't figure that out, it's okay. Chat is also fine, so don't worry. You can also log into the marketplace and ask them directly on the forum. So we'll be launching a few polls to get your feedback as we go. And on that note, without further ado, I'd like to introduce our first presenter. Peter Kreisa and Matthew Brown manage National Energy Improvement Fund. This was our first issuer to sell securities on Raise Green, and your first always holds a special place in your heart. So over to you, Peter and Matthew.
Thank you, Matt. I'm going to go share my screen here in 1 second, and I will be there. All right, you now can see my screen, but I'm going to share it from the beginning, and I'm going to make one little tweak here so you can see it. But you know, we're honored to be with you guys. And is my screen now showing or not?
It is showing, Peter. It's not in presentation view, but I think that's okay.
Yeah, I'm having, as typical with all these things, it's not in presentation view, but I will get there in a second. So, you know, while I am waiting for my other screen to appear and apparently show up, okay. I'm sorry, guys.
That's great. That's great. We have your note view.
All right, here I am. Okay, great. Well, now we're here, and Matthew and I are here, and again, we want to thank you guys for the opportunity for Raise Green to invite us to this the presentation here. And Matthew Brown and I will both be speaking briefly on our opportunity, but most importantly, it's really about having this collaborative partnership that we have formed with Raise Green, where we're both mission driven and as well as pragmatic in terms of our whole approach of everything that we're doing. I think it's an exciting thing. We are very focused on compliance, as Raise Green is, and Franz and Matt and their entire team have been wonderful to work with us as we all move into this expansion of opportunities for smaller investors to invest into into climate related investments and other things. I mean, this all came down to, like, my daughter and her friend said, "Daddy, how can we invest in your company?" And I said, well, let's talk to Raise Green. So this has been a great format for that. We like to view ourselves as being kind of this confluence between altruism and pragmatism about, yes, we all want to do the right thing from a climate perspective, but we also want to support the economy. We also want to drive things. And how do we do it? So in a very, very 7-minute quick overview, the National Energy Improvement Fund really comes from a genesis of my family's business from 50 years ago, that we moved into energy efficiency lending about 20 years ago, and Matthew's business for 20 years of providing the consulting and program development for utilities and states around the country, all about making energy efficiency and renewable improvements affordable for consumers and small businesses. So we invented climate action investment notes to kind of make that accessible to more people. The National Energy Improvement Fund is all about that. It's all about going back to our history of doing over $800 million of projects in this area in what we call the essential improvements, you know, the heating, cooling, roofing, windows, battery storage, you know, and certainly we do renewables, but our focus is really on like my heat pump just blew out. What do I do? How do I afford that? And the only options I've been given to do that are, you know, 0% for 12 months and 35% thereafter. That's not a tenable way to grow energy efficiency or resilience or anything else. So we have focused our development upon all those things. We've done a lot of work in this area, specifically with contractors, because they're the point of influence in all these things. Nobody, frankly, wants to make, you know, improve their installation. I mean, it's a very small part of the world, right? So it's the contractor coming to their house. How do we influence the contractor that to make that affordable for the consumer, as well as distributors, manufacturers, utilities, and governments? We're lending in 23 states as a consumer lender and nationally on the commercial and light commercial and small business and national commercial perspective, which Matthew will talk about. We have moved into resilience lending with our acquisition of the My Strong Home platform that allows us to do hurricane resistant kind of roofing financing. And our greatest, I think one of our greatest attributes is that we are a certified B Corporation, which really is a testimony to the foundational principles of our business. And we're, you know, named a partner of the DOE Home Improvement Expert Partner. And, you know, we are focused on this mission completely. You have generic finance and you have specialty finance, and we are specialty finance. Focused to affordability, climate impact, and job development. We service the entire market, but it's all about the middle market, which is both low, moderate income and middle market consumers, to try to make this core efficiency stuff, heating, cooling, insulation, roofing, affordable. About half of our loans, or 43% of our loans, are all to that low to moderate income market. Every project we do influences energy efficiency and savings. We prioritize resilience, you know, as well as the hurricane resistant roofing. And we've done about 6,000 projects to date since we were founded in 2000. And well, Matt was talking about this, like they founded Raise Green about 3 years ago. We come from a legacy of, you know, 30 years of doing this, but we founded NEIF really about 3 years ago. We've done about 6,000 projects so far, and we have about 1,000 approved contractors nationally. So Matthew, if you'd like to talk about more about our focus, that'd be great.
Sure. So it's interesting as we talk to different people about who NEIF is. And even yesterday, I was talking to a community development lender who we were exploring a relationship with. And they said, "Well, how do you measure what you do when you look at the metrics for measuring your success? What are those metrics?" And as Peter mentioned, we're kind of a mix of what he was saying is kind of the pragmatic, along with the a much more mission-based type of goals. So yes, we are very focused on profitability. We are very focused on making money, as would a for-profit company. But we are, as Peter mentioned, a certified benefit corporation. Therefore, we are very much a mission-based for-profit company. So we do have a very heavy focus on environment, a very heavy focus on climate. That is why I get up in the morning to come and do what I do. I think that's really, if you were to ask most members of our team, that is why they get up in the morning, is really addressing the climate crisis. We are very focused on energy efficiency, very focused on resiliency, very focused on serving a market of people who are not necessarily always able to access financing. So as Peter mentioned, we have just slightly less than 1/2 of the loans that we have made have been to low and moderate income households. We're very proud of that. That's kind of fits in with our broader mission as a benefit corporation. And so that's a very important element. We are also very focused on serving small businesses. So while we are, we do work with large utilities, for example, quite a lot, but fundamentally the people who are in the companies that are delivering energy efficiency into a home, fundamentally the companies that are delivering energy efficiency into a business, tend to be small to medium-sized businesses. Those are our partners. That is our target. Those are the people whose businesses we really help to grow. So that's a big important part of what we do. And so you can see in this slide some of the metrics that we've developed. I'm going to move quickly because, Matt, I know that we need to get to our work probably right at our 7 minutes. But I think the key thing is we are very focused on energy, very focused on environment, very focused on serving businesses, small businesses, in the context of, guess what, as a for-profit company, making money as well, making money by doing good. Let's move to the next slide, next and final slide. This is the essentials of what the investment opportunity is. We do have a minimum of $1,000 a share. It's a 5% annual amount paid quarterly over a 5-year period. Final redemption is at maturity, of course, through the Raise Green platform. So, Matt, I think we're probably right at, or perhaps even slightly over the 7 minutes. So I'm going to stop and move to the next phase here.
Great. Thank you, Peter and Matthew. We have one question in the Q&A. This is from Bunny Silverstein. Why should I choose to invest in NEIF versus a socially responsible or impact ETF or mutual fund?
Well, I think it's, you can call Matthew and myself and talk about what we're doing. I think it's essentially the same thing. Do you want to invest directly? I believe investing in mutual funds and all those things are a great idea, but do you want to have direct impact in the projects you're investing in and understand what you're doing? That's why you invest in NEIF. Now, so that may be the most significant part of this thing. You can see direct impact of the investments that you're making right along, we'll share with you what we've done. So that might be the biggest distinction, Matthew. Would you agree?
Absolutely. I think but they're both good. For not surprisingly, both Peter and I have invested in NEIF, but we have also invested in various, socially responsible funds. So it's not. I would hope that it's not a choice necessarily of one or the other, and that we should be competing. But it really is from our perspective. It's a much more direct impact kind of investment, and so we're able to say, okay, we have done as a company. You have supported the ability to get us over. We just hit 6,000 residential loans. We're going to hit 7,000. We're going to hit 8,000, right? So that you're going to see that it's a very direct kind of impact that I think you can see.
Awesome. Thank you. Here's a question that was on the marketplace. Where is my return on investment from this actually coming from?
Yeah, well, it comes from, so we make revenue in two ways, right? Our primary revenue is recurring revenue from a loan servicing spread that we own and manage. So if we're making a loan to a consumer, we have capital partners that provide the underlying capital, and we retain the program management and servicing spread that provides recurring revenue year over year as long as we have that loan. And that's the cash flow that comes in the business. Primary cash flow. Secondary cash flow is we also operate as a facilitator for other larger commercial projects that we earn brokerage fees from. We have retainers, Matthew, with how many 15 utilities now that we run their residential or in commercial lending programs that we get paid monthly. We also operate a program called Rebate Bridge that provides contractors with advanced funding for delayed rebates that a state or utility might provide. So your return is coming from the cash flow from all those streams of revenue coming in.
Awesome. Thank you, Peter. Two questions, and then we'll move on to the next panelist. can I hear more about the types of loans you offer? Are they personal loans? What are the rates and terms to these contractors?
So I'll talk about the residential side, then Matthew will talk about the commercial side. So residentially, so if you think about the world right now, again, I used my example before. It's I want to replace my $10,000 heat pump, right? So the contractor comes in and says, yes, we have financing through, blah, 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 finance company, and it's 0% for 12 months and blah, blah, blah. That's not our market. Our market is like almost like auto finance. If you want to have a 799 10-year fixed rate loan that you can pay off whenever you want to, unsecured, like an auto loan, again, this is market-based, we can provide that. When we operate programs with states, like in Maine, we operate the Efficiency Maine program, which is 4.99 10-year financing. We will operate other programs that could be subsidized by utilities that could be 0%, but it's all about the subsidy. What I can't stand on the residential side is the duplicity of the 0% financing right now. We all know there's a cost to that that's being packed into the consumer pricing. And we fight against that for the residential side. We say, listen, let's be transparent and fair and not duplicitous. So it's all about low monthly payment, pay it off whenever you want to, versus promotional finance. Matthew, on the commercial side?
On the commercial side, it's very similar. The difference is the projects tend to be larger. So typical project on the commercial side is somewhere between, often for an energy efficiency retrofit, $50,000 to $150,000. We will originate those loans to support that type of project. We lend to commercial enterprises. We lend to nonprofit enterprises. We lend to government facilities. In each case, it's to support their energy efficiency retrofit, and in some cases also for solar energy. I will mention, just as kind of an aside here, this sometimes is a rather small world. In solar in particular, we will often work through and with partners. And guess what? One of the partners that we're working with is, at least on my screen, just to my left. So we are already engaged with Solaris in helping to fund larger solar energy projects. So commercial is a much wider space, but with a real focus in energy efficiency, probably in that $50,000 to $150,000 size.
Great, thank you. And let's see, we have two more questions from one individual. Their second question is about loan default rate, which I believe is on your marketplace, but we can make sure that they follow up with the impact report as a follow-up to that, or I think you may be able to respond to them directly.
Yeah, well, just very, very quickly.
Okay.
I mean, so NEIF and my previous company, AFC First, we kind of set the standards for all this stuff, and like all the securitizations have been based on the performance we've had for 20 years. It's amazing that the default rate on these loans on the residential side are always annually less than 1%, annually, which compares to similar unsecured lending for other stuff, which is 3% annually. And I think a lot of it has to go with the nature of the improvement, that they're saving money on their cash flow, the nature of the contractor improvement. So I think consistently, I'm not going back through 2006 and all the way through, it's been less than 1% annual charge-offs. And I think commercial is very close or less than that.
Okay. And just one last piece, just a bit behind, but I think it's an interesting question is, do you have like a environmental hurdle for your investments like you would for a financial hurdle? Is this something you're starting to think about as an organization?
I'll kind of start off on that. It's interesting. So we do not have, say, a particular energy savings, and this is how we probably measure it, energy savings metric built into our underwriting criteria. But that said, we know that because we are financing energy efficient equipment broadly, we know that we are having that impact. But even more to the point, we do a lot of our work through and with utilities around the United States. And those utilities are essentially, we are their financing partner. So for example, we are just about to launch a program with Sacramento Municipal Utility District. We just launched a program with Duke Energy. We've had programs with Xcel Energy. They will, we work with them, they identify projects that save energy, and that they are providing energy efficiency rebates for. So we will, in those cases, and that is the vast majority of what we do, certainly on the commercial side, every project that we do has been pre-qualified in a sense because of that association with a utility. So it's not a specific metric that goes into the individual project underwriting, but it is a huge part of what we do and how we kind of source our projects.
Excellent answer, and that's maybe something we can all work on together. It's a critical issue, and it's, I think, one we're all trying to figure out. I'm gonna now launch a little poll, which should come up, and so great, it should be on your screen. It'll stay open for 30 seconds. Should take a little less than that to answer, since it's just one question. Our next presenter is Colin Kasunik, CFO of Bloc Power LLC and managing member of Bloc Power Energy Services 3 LLC. Colin is a delightful fellow to work with and has a great sense of humor. It's been really fun getting his offering on the platform. Colin.
Hey, hello everybody. Thank you for having us, Matt. Thank you for having us, Franz. It's really great to be here, and it's been great getting the whole program set up. You know, Raise Green is wonderful, and I'm not just saying that about the platform. It's, you know, the folks who are really the core part of Raise Green here. So let me share my screen, and we can get into it. It's actually interesting how much it sort of builds off of what the prior folks were talking about. We also work in energy efficiency. We also work with buildings, and let's see, got that. And okay. Let me know when you can see my screen.
Yep.
Do you see the presentation, the slideshow?
Yes, it's in the PowerPoint program and not full screen.
There we go. Okay. Guess I just needed to click it again.
This is on presenter view. I don't know how to switch it. I'm not sure which button it actually is.
I can do that here, in fact. How's that?
Great.
Looks great.
Okay. So Bloc Power, we make buildings greener, healthier, smarter. We've been really into electrification. I am CFO of Bloc Power. What we have raised on Raise Green is a subsidiary that we use for project investments, right? So we bring capital in, and then we deploy it into specific building energy improvement projects through this subsidiary of ours that is wholly owned. So that's Bloc Power Energy Services 3. So there we go. The problem that we see that we face is that building energy infrastructure is it's just old, right? There's a lot of buildings in the United States. They're old, they're beat up, and energy is a big part of the problem. Buildings are, 40% of the energy impact nationally, right? If you're looking at generation vehicles, buildings are 40%, and they waste a lot of energy. Now we focus in on small and medium-sized buildings. You might call them commercial buildings. Generally, they're multifamily buildings. They're houses of worship. They could be small stores, all of that. We'll work with some single family. We'll work with some larger commercial. But really, this is the area that we focus in on. And why? Well, because it's the most underserved area, right? It's a very difficult area to serve. but we built some software around that, and I'll get into that. And so these buildings, though, they're the most inefficient buildings. They waste a lot. They spread COVID. They have lead, asbestos, disproportionate amounts, and they're generating a lot of greenhouse gases. So the other problem, why they're hard to address, is to work with these buildings, you have to get 6 or 12 people all together across a number of industries, right? You've got the financing, you've got the installers, you've got the utilities, you've got municipalities, right? And then analysis and implementation is very expensive too. To do a traditional energy audit at a multifamily building could be $25, $50, $100,000, depending on how deep you're going. And that's just to know what you should be doing, right? And so if you really look at that, you lose money. It's not a money-making opportunity. So there needs to be a cheaper way to do it. So bringing all these parties together, right? That's sort of what Bloc Power does. We've built some of these components, and we work with other folks on other components. But what we've realized is there's not enough energy efficiency projects happening. So what are we? We're kind of a tech-enabled energy efficiency developer, right? We've set up our own financing program. We've set up software. We've set up industry relationships, community relationships, utility relationships, all to try to pull the pieces together to make these energy efficiency projects happen. Because it's just been this fragmented transaction, and that can't work, right? We need to sort of make a market here. And so our solution, how do we do this, right? Well, we've made these relationships, but we identify, we finance, and then we upgrade, right? And so there are 5 million buildings that we could be looking at. That represents about $100 billion of annual market in terms of energy savings. And what do? We do energy efficiency upgrades. We do solar, we electrify the building, we do health and safety upgrades. We sort of roll all of this in as a smart equipment installation. So the first step, really, how do we figure this out on the identify, is we've built some tools that allow us to pre-screen buildings without having to go on site. So we've built a building database. We get a sense of buildings and building characteristics, and we can take a building and compare it to our database and then say, oh, okay, we believe this building will have a good opportunity, medium, low, somewhere in the middle. And then we can get a sense of what measures should be undertaken, right? And so folks can go on our website at blockpower.io and see if their building is eligible. And then they'll give us some information. We can take that and we'll compare that against our building database and give them a report. All that is remote. So that cuts a lot of the cost of doing all of this out of the process. We then also have built this no money down, 15-year financing package, right? Also secured against the energy assets, not against the property. And so this allows us to stretch out the payments so that the customers can pay as they save, right? Sometimes there's infrastructure involved, so the cost needs to be a little higher, but we're really aiming to get customers to pay as they save and have as much savings versus the payments they need to make as possible. And then finally, we have these partnerships with municipalities, states, utilities, and manufacturers that really help. And so we have, we really go in and we look at a building, we look at the upgrades that are needed, and we'll do air source heat pumps, insulation, air sealing, solar, and really any other things that our data tells us will be a good opportunity and that the customer is interested in looking at. And we've been doing well with this, right? So since last year, and this has helped the industry broadly, but you know, the Biden infrastructure plan and the election has really been a tailwind for everyone. And that's something that's really helping us in terms of getting out and becoming not just regional, but a national brand, being able to serve folks more of as an electrification provider, not just energy efficiency or solar. We've had financing momentum. We've closed a Series A. We've closed 50 million of project capital outside of the crowdfunding. And we've got this $1 million crowdfunding program that we've been running on Raise Green that's gotten oversubscribed early. There's more to come. We feel crowdfunding is a very, very attractive and very interesting way to fund this. We believe that getting folks in local communities to invest in building upgrades in their communities and nationally is something that's very effective. It enables and empowers people to really make change in the community, I think. And we all believe that A lot of what's held back action on climate change is that there's only so much that people can do. And this is another real tangible way that people can interact beyond their individual behavior, which as we all know, only goes so far. Now they can put money towards improvements in the community in energy. And so we believe crowdfunding is great for that reason.
Great. Thanks, Colin. I just want to be mindful of time.
Sure.
Let's give, if we have one question from the audience, we could take that now. I know one person, Francesca, says, is Bloc Power taking investments now? Though the website says not at this time. Colin hit on that briefly, just mentioning that it did hit its maximum. And there may be future offerings coming, but we're not sure yet. So for now, if you're interested, you can sign up on that website. And if there is another one, we'll let you know. You did make an interesting point that I want to highlight before we go to Alex with Elmley, which is the potential of crowdfunding. In Europe, it's very common for larger companies to use crowdfunding as a way to identify business opportunities. So for example, companies that are Series B may raise money on crowdfunding because suddenly they get 1,000 evangelists who then use the products and recommend the products to others. It's a very common go-to-market strategy in Europe for fintech companies, and I think a really exciting option for folks like Bloc Power or NEIF or Elmley Energy that are looking for project sites. It's a way to crowdsource insight as well as capital. So with that, I'd like to move over to Alex Blackmer, CEO and founder of Solaris Energy and managing, we're going to do a poll as I'm introducing Alex, CEO and founder of Solaris Energy and managing member of Elmley Renewable Energy LLC. Alex is a deep wealth of knowledge in the solar industry, who has been proving now for a few decades that solar is not just for hippies and cowboys, but for everyone. So pleasure to have you on the panel, Alex.
Thanks, Matt. And it's great to be here. As Matt said, I'm Alex Blackmer, CEO at Solaris Energy. We develop commercial solar projects for universities, municipalities, schools, hospitals, churches, and other nonprofits, but strictly in the commercial sector, also for utilities. So we've been doing that in Solaris since 2012. Before that, we started as a nonprofit, the Atmosphere Conservancy, which was doing the same things starting in 2008. We've carried the mission-based aspects of the Atmosphere Conservancy on into Solaris, which is not yet a B Corp, but has applied to become a B Corp, and we're just waiting for the review to come in. We are a Colorado certified public benefit corporation, which is basically a legal structure that requires us to have social or environmental benefits as well as financial benefits. So that's why we focus on building solar for nonprofits. We have 27 megawatts of solar projects operational or under contract currently. And we have a pipeline of another 41 megawatts of projects worth about 50 million. So this one project in Vermont at the Putney School, which is also the Elmley farm, is a fairly small project, but we're using it as a test to see, to gauge what the interest in crowdfunding is. We do have access to capital from banks, but we often hear people asking us how can they invest in solar, and we haven't had a good way to bring in smaller investors until now. We've only been able to bring in accredited investors or banks, so we're really excited to be able to bring in smaller investors. Our current investment we've raised $220,000 of our $250,000 maximum, which is great. We've had a lot of interest, and there are only 2 days left, so there are still about $30,000 remaining. We were limited in size by the SEC to that 250,000 until we get audited financials. So we're hoping to do that soon and then have a much larger offering in the future at some point. So basically the way our program works is we provide the capital to construct a solar array, in this case for the Putney School, which is a highly reputable institution that's been around since 1935, a very progressive alternative school that I was lucky enough to attend back in the 70s, which is kind of where I got started on this whole clean energy routine that's been my career ever since then. But anyway, we finance and build the solar project and then have a contract with the school to purchase the electricity for a 20-year term at a rate that is 10% below their utility rate. So they're saving on their energy bills from day one, and we receive the income from them on a monthly basis, which provides a return to our investors. Investors also at the company level, investors also receive tax credits. So we get good returns to our initial investors. And then we apply debt to a project, which is where the Raise Green fundraise comes into place. So that levers the return for the owners of the project. So typically a project has up to about 50% of its costs in debt, which often we'll get from a bank or a lender. But in this case, we are crowdfunding for that debt. So this is a tried and true structure that pretty much the entire solar industry is using nowadays to make the transition to a renewable energy powered grid. And it's happening a lot faster than anybody really expected, which is very exciting. I'm excited to be doing this through Raise Green to allow smaller scale investors to participate. So we're hoping it will be something that we can make as a regular part of our operations going forward. So right now, again, my apologies for not having a slide deck for you folks. So you're going to have to just look at my face, I guess. But yeah, we have a minimum of the investment of $500 and at a fixed interest rate of 4.25 for a 5-year term. It's slightly a lower return than our other investors on the screen here, I see, and that's we didn't really realize what other people were paying, but this is more than we're paying a bank for a similar investment. We can get bank loans for 4% on a large scale project currently. So that's why we set this rate based on market rates in our industry. Our minimum was 50,000. We passed that fairly quickly. Our maximum is 250, and as I said, we're at 220 right now. There is a 1% bonus paid to the investors if we call the loan back early, which we might do because the school has an option to purchase the array in a couple of years. So if that happens, there will be a bonus paid out of 1%. And that's the basics. The details are on our Form C. Let's see, I don't know how I'm doing on my 7 minutes. I neglected to set my clock.
That's okay. Let's see if there's any questions for the audience. Okay. We have a question from Francesca. It's not clear if any of them are offering investment opportunity. They say funded, how can we invest? So all of them are active. They're funded on their minimum, which is that green bar, but you can see the blue bar on the marketplace is actually the maximum. Bloc Power is at its maximum, but there's still room in both Elmley and NEIF there. Also, a fun fact about the Putney School is not only did Alex go to it, but his mother actually did as well. So we're very fortunate to have that project be one of our kind of initial portfolio projects here. North Lennox asked a question, which is a simple one, what are the benefits for you in crowdfunding? How do you actually see this fitting in? Is it a proof of concept for you in terms of just altering the structure of these financings, typical solar financings, or what actually is the benefit to you, Alex?
That's a good question. We do use debt on every project we build, so we need debt, and rather than getting that from large institutions who are increasingly interested in investing in solar, we feel it's important to democratize the process so that anybody can invest in solar and make the same returns as a Wall Street bank is making. It just seems like the right thing to do in terms of sharing the opportunity to acquire wealth with people who have lesser means to be able to do that.
Great answer. I love that, Alex. Thank you for sharing that perspective. We have a few minutes left, and I know that Franz wants to wrap things up as well. But first, I would love, we've been focusing on investors here in Investors Day, but I see a few people in the audience who are actually thinking about issuing their own projects. Do any of the folks on the panel have any tips and tricks for getting an offering live, things they wish they knew at the beginning, or things they're thinking about now as their offerings live? Maybe Alex, do you want to go first since you were just up?
Sure. That's a good question. And it was a little bit daunting at first to look at the SEC forms that are required. But Matt walked us through it really well, kind of piece by piece, and made it easy in the end. So I guess my main advice was don't be intimidated by the SEC requirements. They're really not that hard to get through. The only thing I wish we could do is increase our raise amount. Getting audited financials for our company is quite a process because we have so many projects around the country. Auditors are going to have to look at each project, and it's going to end up being a very expensive proposition just to get those financials. But we're going to do that anyway. I think it's worth it. But you can do the minimum 250 raise without having to get those audited financials. So that's a good place to start.
And I'll just add that that actually was part of the special COVID exemption that the SEC put in place. So it's going to be dropping back down to 107K. But we can write letters to the SEC sharing your frustrations and challenges. Colin, do you have any tips, tricks for folks in the audience thinking about issuing their own projects?
Yeah, I mean, work it through. Think about who your network is also, and think about who the sort of general partners that you work with in the community are. I think what worked for us was really being able to do a lot of press-worthy events when we went out and raised. So if you have energy projects that you think could get funding, yeah, go and try them. And if it's a matter of getting one out there at that minimum raise, then that's great. I think the bar still may be a reviewed financials to be able to do up to $1 million. So an audit is considerably deeper than reviewed financials. So that's another way to look at it, another thing to think of.
Thanks, Colin. Matthew or Peter, anything you'd like to add?
Yeah, I think, the big thing is probably messaging, because, it's a matter of kind of figuring out how to develop a succinct message that people are going to remember. A lot of times, I think what all of us do is actually, there's a lot of complexity. So how do you distill that down into a message that's very, very easy to communicate, easy for people to understand?
I think that's it. Oh, go ahead.
Make a good video.
I do have
Make
one.
a good video. Messaging, put the message, make a good video.
Peter?
But also one additional concept. This kind of, all the offerings here are all basically, similar kind of, we're going to pay you a yield. It's going to be good stuff. It's all going to be great. That's an IRA investment. That's what that is, right? That's what most people will put this into. That's what they would like to put this into. Oh, I'm going to make 5% or whatever, and there's an upside. So when you guys can figure out how to have people make IRA investments through the platform, huge upside for you guys.
Yeah, definitely.
I agree.
That's in our roadmap. We're working towards that. Today, I'm just going to wrap up the panel. I really appreciate you sharing those insights. There's a lot of complexity. Everyone wants a sustainable and just world. What does that mean? It often comes down to complex financial mechanisms. I really appreciate the transparency in which you all are sharing that on this panel, but also in your Form Cs and in the work that you do. We will continue to strive to make that messaging and content more accessible for more people, because unless they understand some of these things and can explain them, then they won't be able to get involved. And that's part of the work we do every day. So I'd like just to give a huge virtual round of applause for our presenters. Thank you so much for taking time to present and answer questions. With that, I'll just turn it back to Franz here to close us out.
Yeah, thank you, Matt, and thank you, Alex, Colin, Matt, and Peter. Amazing things that you all are doing in your companies, and we are super proud to be able to support that through inclusive financing. I see that we've got a few questions about how to actually invest. I am putting a little chat item into the overall chat so that people have some instructions. But also please do feel free to reach out to us if you have questions about how to do this. If you go to the main page, raisegreen.com, the first blue button that says invest in your community will also take you to the marketplace where you can place an investment. So with that, I know that we are at time. We are really pleased that you all have joined us, and we're also part of the Techstars and ABN AMRO Future of Finance Accelerator program. So we're actively working to come up with new ways to prove additional verifiability, like the Climate Bonds Initiative, Partnership for Carbon Accounting and Financials. We've got a lot going on, and we are going to be holding another Investor Day on July 15th. So we will make sure to invite you to that if you sign up for our newsletter. And I believe that you all are already informed and signed up by having come to this webinar, but for those watching, you can join us that way as well. So we are, again, so appreciative of the outpouring of support, and thank you again to all the amazing issuers and investors. We are delighted to have you at Raise Green Investor Day, and till next time, onward and upward. Thanks so much.